Okay, folks, welcome to Market Wrap for the 22nd of February. All right, so Palo Alto Networks is out. Our earnings trade appears to be doing pretty well. As a reminder, we sold the 565 call options, and we are short of those options. They beat expectations. They are rallying after hours, but as it stands right now, it looks like we're losing a little bit of steam here. A lot of overhead supply between. Oh, look at this. They just dumped it. Wow. Wow. I wonder what that's all about. See if any news came out. That literally just happened. Maybe a bad tick. That's a huge. That's a $35 drop in a flash. All right. Be that as it may. A lot of overhead supply going into the new trading day, so the probability of Palo Alto Networks trading up and into our strike price is very improbable, absent some headline risk. So I feel comfortable at current with the trade and that we should be profitable. We'll target an 80% profit on this one, and we'll look to exit, go to cash. And cash is paying off for us, right? That's where we want to be. We'll build on names that appear to be bottoming out. That is it. This sell-off in the recent seconds here, I'm not seeing bids come in at all. So I'm going to want to take a look at the overall market. What kind of volume are we looking at here? Not huge volume. Yeah, this is a bad tick. Unless it was a wide, huge spread between the bid and ask after hours. Now it's back up to where it was before. Okay, now it makes sense. All right, let's go to the Nasdaq 100 really quick, just to make sure that nothing did in fact happen. Okay, yeah, no volatility here. All right, let's go to the closing price action. Okay, let's kick things off with bond yields. Bond yields were up today. 10-year Treasury bond yield was up. Still, I don't like the stochastics, RSIs, not that wonderful either, in that they are losing momentum, as is ultimate oscillator. Now, bonds benefited from the weakness in stocks today as money moved into cash. Some moved into gold, not as much as what would have been expected into gold, and money moved into the bond market. So a very big move up on the TLT, the 20-year bond ETF. Now, I spent a few minutes before recording this trying to figure out what the heck. I even went to CNN of all places to try to get their perspective on what's going on over in the Ukraine and with Russia. And even Fox is running similar headlines to CNN. So the corporate media is just all over the place, not making sense of anything right now. Apparently, Biden called off a meeting with Putin, or Blinken called off a meeting with Lavrov. You can't even tell. So really confusing, probably what they want it to be confusing, so that we continue to focus overseas rather than focusing on domestic crises, not the least of which is Canada. Canada last night voted for emergency powers, allowing Trudeau to basically become a dictator. Nobody's talking about it. Nobody is talking about it. Nobody's outraged. No condemnation. Yet we're worried about Russia and the Ukraine. So I can't help but say that it's concerning, the lack of attention that Australia, New Zealand, Canada are getting. It's very, very concerning. Now, moving on to the tip market. Significant move up higher today. Up nearly a third of a percentage point. Volume dropped off, though. The dollar, daily chart, looks like it's getting set for a continuation move up higher. Very, very light volume, though. Very light volume. So there's no conviction here. It's really shocking. With the selling pressure that we saw today, granted, we were back and forth somewhat, but with the selling pressure that we saw in the market today, to see so little volume on the dollar is really weird. The VIX. This to me is topping action. You know, we've seen this before, most recently right here, the 25th of January. Prior to that, Back here, December the 20th. Prior to that, back here, August the 19th, so on and so forth. So, and then I skipped over this one here. The 14th, Valentine's Day. But volatility remains elevated. We're not ready to rule this out, taking one more run up higher, especially if things get kinetic over in Europe. The Dow Transports, they broke down today, folks. They broke down below 14,800. If we break down below 14,567, we're coming down to a 13 handle on the Dow Transports, and volume rose today. Volume rose. Stokes is still weak and getting weaker. So we continue to lose momentum, or another way to look at it is we're gaining downward momentum. The S&P 500 daily chart. Again, the Stokes. This is going to repeat itself all night long tonight, folks. Watch the Stokes. They are telling you that we're weak and we're probably going to get a bit weaker. We bounced off a support level. Now, historically, what you get on the S&P 500 when the Stokes bottom out, you usually get a V-shape type recovery. Volume continued to rise today. And if we get that V-shape recovery, maybe we'll get a short-term bounce. I don't think that we have seen the bottom yet. Let's get a feel for how we're looking on a weekly chart. Granted, it's only Tuesday. Look at the Stokes on a weekly time frame. Lower highs down below 50. I just don't buy the fact that we're done going down yet. And this is why on that PANW trade, I did not want to put on a put side to that trade. I just want to avoid as much risk as possible right now. The Dow Jones daily chart, Stokes weak, RSI weak. We bounced off a support level, new weekly lower lows, volume rose. The Trip Qs, Stokes weak, RSI weak, so momentum waning. We broke support levels, new weekly lows. So the question now becomes, you can apply this towards the S&P, the Dow, in a moment probably the IWM, small caps. Do we put in a double bottom setup here? Or do we break down below 334.15? If we close down below that mark, that spells a lot of trouble for this market. Because don't forget what's setting up here. Head and shoulders setup. Left shoulder, head, right shoulder. For all intents and purposes, we broke the neckline today on rising down volume. Small caps. Again, Stokes weak, declining. One big difference here is that we did not see rising down volume today. The banks, daily chart. Thank goodness we stopped out of the banks because they haven't stopped going down. Stokes weak. We're nowhere near ready to get back into the banks. Avoid. Technology. Again, very weak. We broke support today. New weekly lower lows. The trend to the downside continues. Volume rising to about average. Consumer discretionaries. The RSI was so weak on this last rally up on this bear flag setup that we couldn't even close above the 50 mark. This is a very weak chart. Stokes declining. Look at the volume here. This is what happens when you have inflation. People have to spend money at the grocery store and at the gas station, and they can't spend it on discretionary items. We got to avoid this space like the plague. Energy. Energy did not have a good day today. This is no great shock. The market interpreted whatever was announced today by the corporate news media. It was interpreted as being fairly benign. So energy, which is safe haven play, reversed on the day. Bearish reversal bar. So we're probably going to go lower here. Now, this is a leading sector. Look at the volume. That's institutional distribution. That is not mom and pop selling 100 shares of the XLE. Emerging markets, daily chart. You got to avoid emerging markets right now, folks. Stokes weak, lower highs, lower lows. The dollar looks poised to rip up higher yet again, and that'll send emerging markets lower. Gold. So gold is meeting a bit of resistance at 1910. It's very elevated on the stochastics. Normally what you get is a rally, then a rollover, and then you look for a higher low, like you had here, like you had here, like you had here. We're due. We're due for a pullback here. Massive volume, though. Massive volume. Two positions. The GDXJ daily chart pulled back today. We're probably going to pull back and retest 4150. Volume to the downside, light and declining sequentially. Exactly what we want to see. NUGT closing down nearly 2%. Broke support. How was volume? Volume was pretty heavy, but declined sequentially. We booked some profits. Remember last week, thank goodness that we did. Now we could start either A, buying those shares back at lower prices, or B, selling naked puts deeper out of the money. If they're assigned to us, okay, we'll take them. Silver. Silver had a good day today. It did fade off the highs, but it was up 2%. So our silver trade doing very well, on volume no less. But these Stokes, they look very much like the gold Stokes. They're extended. You got to expect a pullback, and we did fade off the highs of the session. So don't go chasing. Silver, daily chart. Silver miners, I should say, pardon me. Silver miners. Pulled back to support. 1250 is a good support level. How's volume? Volume rose sequentially. Avoid. Don't go adding more here. We want to make sure this support level holds. Gold money. It ripped last week, pulling back, which is expected. We closed out the session last week above the third standard deviation Bollinger Band. Down volume rose today. I think it's the pause that refreshes. Cal-Maine Foods, new weekly high, folks. In fact, new 52-week high, I do believe. Yep. We hit highs not seen since August of 2020 today. The rally continues. PayPal, we added more today. Unfortunately, we did see a fade off the highs of the session into the close. What I'm hoping for here tomorrow is, let's go to a 5-minute chart really quick. Maybe a 15-minute chart. See if that does it. What I'm hoping for is a washout tomorrow morning of the market, and ideally for PayPal, big selling into the close. But we're going to be looking to add more here. I wanted to take it down, then reverse it to close up on the day. So don't expect me to go adding any more until we get that reversal day. DWAC, a good day. It was up over 10%. I would be careful here. We have the application being launched on, I believe it's only on Apple so far, soon coming to Google Play. The question is that when it launches, do we see a sell the news event? That's my big concern. All right, watch stocks, NVIDIA. I can't buy this yet because the Stokes are still so very weak and the market is just so iffy with a lot of headline risk out there, folks. And notice how nobody's even talking about the Fed anymore. We broke down below support today. I would love to open up a Strangle here, but I can't just yet. The chart is too weak. I'm just worried about an event, a major sell-off in this market. It may not happen. I'm just worried about it, and therefore cash is the best place to be. Some names that we're watching that are nearing extreme oversold levels or are at extreme oversold levels, 3M, RSI, 19.88. All right, so we can't ignore this. A lot of the damage has been done here to 3M. It's not going out of business. It's a mega cap name. So we could play around with this. We could open up strangles. We could sell naked puts, whatever we want to do here, because the downtrend is unsustainable. Now, what we want to do is identify where we have historical support. Monthly chart. Unfortunately, it's down here at 140 per share, maybe even a 130 handle, around 138 per share. So there's more room to fall here. So I don't want to touch it. I simply want to watch it. That's it. Another name, Tempur-Pedic, they must have reported earnings, and they got annihilated. RSI daily time frame is at, wow, brutal sell-off here. Look at the volume. RSI is at 19.46. This is going a lot lower. We could be going down to $25 a share, $26 a share. So no rush here. Now, AMD is setting up as a trade. What kind of trade? Not sure yet. I could see both a bull case and a bear case, right? So the bear case, head and shoulders setup, left shoulder, head, right shoulder forming, neckline at $99 a share. I would argue that if we break this lower band of support in blue, that's sufficient enough for me to go shorting AMD. Now take a look at your Stokes. They tapped 20, rallied, they're rolling over, folks. This is a weekly chart. It's early in the week, so we can only put so much emphasis on this chart. As the week progresses, then we can have a more educated opinion about which way the weekly chart is going to close. Let's go to the daily chart. Not looking good here. It was up on the day, but topping action. They sold into it. The 50 days declining. We found resistance at the 20-period moving average. Stokes are weak. Strong up volume today. We did close up over 1.5%. But man, if we close down below 109 per share, we're breaking down. That's what we're going to do. So right now we'll do nothing. We'll wait for the market to send us a signal about what it wants to do. So more to come tomorrow. With that, folks, everybody have a great night, and I will talk to you tomorrow. Be well.